guys, we're going to take a look at a lot of earnings charts. So this week, we've already seen the big banks launch, and some of those were fairly in line with what was expected. But this week, we're going to get a lot of the regional banks, plus a handful of companies that I think are even more important that we should be taking a look at because they give us a little more clues about what's going on with the economy right now. What are they? Let's dive in and take a look. So the first one out the gate is Fastenal, ticker FAST. And as you can see, it has an amazing earnings surprise track record. The last miss was actually just before the pandemic hit. So it has not missed since the pandemic in March 2020. That's impressive. And look at those shares surging up to hitting new all-time highs. At the end of last year, they pulled back just a little bit, but for those who have followed Fastenal over the years, it is a grinder stock. It's not one of those that, suddenly is up like 15% on some kind of news or even an earnings report. It just slowly grinds higher day after day, it seems. And the last 3 months is a good indication of that. The shares are up, but they're up only 5.7%. But you start adding up those 5.7%, and then you get a nice return on a stock like this. My only problem with Fastenal is that it's expensive. It's trading at 30 times. And that's a little pricey for me for single-digit growth and what kind of industry they're in, which is the manufacturing and construction side. However, construction has remained buoyant. So this one is going to be interesting. So far, they're not indicating that, the overall economy is in a recession. This is one to watch, though, for clues about that side of things. And then we're going to switch it over to another kind of industrial name, PPG. PPG, a little bit different story, but you can see, look at this chart. So it has been struggling the last 2 years since the sell-off there in 2022. Earnings surprise track record is pretty good. Just a couple of misses scattered throughout, just 4 over the last 5 years. One of those was in the pandemic. This one down here in 2020 was a pandemic, but barely missed their 0.8% miss. So this is the type of company that just barely beats. The last beat was 6%, the one right before that, 5%, but stays kind of steady Eddie. It has had that rally off the lows there in 2023 at the end of the year rally, and over the last 3 months, the shares are up 13.3%. But looks to be kind of topping out here unless we get something in this earnings report that's going to give it a little boost. On valuations, it's trading at 17 times. That's not super expensive, but this is kind of an older industrial name on the paint and coating side. So you wouldn't expect to be paying, 25 or 30 times. But is 17 times still too expensive for PPG? We will see. Then we're going to switch it over to an important transport company, J.B. Hunt Transport, which is on the trucking side. Trucking and freight in general has been in a recession, but you wouldn't really be able to tell just from the chart, but you would be able to tell from the earnings surprises. So you can see it's missed 4 times in a row as the market conditions have taken a turn for the worse, but Wall Street's kind of keeping it in this narrow range from the last 2 years. It's not willing to sell it off and go back to the super cheap area, which is interesting because you think this is a stock that would be abandoned given the struggles in freight. But over the last 3 months, the shares are trading up, but just 0.3. So you can see, like I said, it's just an up or down narrow trading range gain right now. It's either going to break out again to these 2022 highs, or we're going to finally see the breakdown. It's not cheap. It's trading at 23 times. So this is just kind of a wait and see on JP Hunt. And then let's switch over to the energy sector, because we're going to start to see some of the service side companies reporting, including SLB, formerly known as Schlumberger, and you can see it has an amazing earnings surprise track record, even given the chaos in energy in 2020 during the pandemic. And it's made up all of those pandemic losses and more, hitting new highs last year before pulling back. So over the last 3 months, it's taken a tumble, down 16.8% during that time period. And this has made it a cheaper stock. SLB now trading at about 14 times forward earnings. And this one is interesting because the service side ramps up first when the energy side is ramping up. And so earnings have risen quite dramatically. In fact, let's take a look at what those earnings have done on SLB, just because I'm curious to see what it actually looks like. So this is a great chart. This is what you want to see as an investor, year over year, steady growth. And this is why the shares were hitting new highs last year, still remain cheap. But what is going on for this year? Will we see a decline finally in the earnings growth on SLB and the other services side on the energy? We will see. And then I do want to finish it up with a regional bank. And that regional bank is Comerica. This is one of the ones that a lot of people had, on their list of banks to watch when Silicon Valley Bank and the others were going under. And you can see from the chart that 2023 was a difficult year during the banking crisis, and shares got down close to, but not quite at the pandemic lows. And then the banks really sold off again into the end of October last year. But we've had a nice rally, the 3 months rally of 33% on Comerica. But until these shares really break out again, that would mean going back all the way to 100. I feel like it's just kind of wait and see, and we're taking these small little rallies, and people are getting out with their gains when they can. Now, the S&P 500 up just 12% over that same 3-month period, so it has really outperformed. It is still paying a big dividend, yielding 5.3%, but no one really much cared about the bank dividends because there was too much fear that one of these banks could be the next Silicon Valley Bank. But it appears that maybe the worst is over on that front with the banks. And this is an important earnings report again, so that we can see what's going on behind the scenes with the banks, with the deposits, and just with their general health. So this is definitely one, Comerica, CMA, I'm going to be watching this earnings season and especially this week. So as you can see, we're starting to get a few more interesting names other than the banks. Not that they're not interesting, because they really are this earnings season and probably for this entire year of 2024, as we await to see if the Fed is going to cut rates. And normally I would say, hey, that's not a good thing for the banks. But in this case, it might be a good thing for the banks. And a lot will ride on what happens with the overall economy, obviously, with all of these stocks. But we're seeing quite a few remaining very elevated here as we are now in 2024. Can those elevations hold? We will see throughout earnings season, an important week coming up next week on earnings. And I'll be bringing you all the charts for the Magnificent Seven and the other important tech and growth stocks that I know you're all watching. So be sure to get all of our videos. Go to Zacks.com/YouTube, where I'll be posting them week after week after week as we move through earnings season. And some of these, you can definitely find some hidden gems on the charts that I'm going to bring you as well. So be sure to get them all on YouTube and follow me on Twitter, because I'll be tweeting out even more charts that I can't fit into the videos and talking about what's going on with those. So get us somewhere, but be sure to tune in this important earnings season, and I'll see you again next week with some more earnings charts.